Well, thanks very much for having me along today. We're meeting on the traditional lands of the Ngunnawal people, so let me begin by acknowledging their elders. Dara Nuna, Dara Ngunnawal, Yungu, Nalamanyan, Dunimanyan, Ngunnawalwari, Darawari, Dindi, Wangaralin, Jinyin. And I acknowledge all First Nations people present today. Thank you very much to my friend Richard Dennis for inviting me along today, and to the Australia Institute on a sellout event. I mean that in the best possible way. This is, of course, a moment where we have a chance to really get together and speak about some critically important issues for Australia and for the planet. And I want to acknowledge also Their Excellencies Mr Anote Tong, former President of the Republic of Kiribati, and Mr Nelly Sapaga, former Prime Minister of Tuvalu. My focus this morning is on climate and tax transparency in our financial system, so we can drive down emissions and create a fairer society in the process. This time last year, news broke that global biotech company Amgen was being sued for hiding its $11 billion tax bill from investors. The plaintiff said that Amgen's share price fell 6.5% in August 2021 and a further 4.3% in April 2022 because the company waited to disclose its potential liabilities. The Inland Revenue Service in the United States accused Amgen of underreporting taxes from 2010 to 2015, mainly for attributing what should have been US taxable income to a Puerto Rican unit. And that example powerfully illustrates how shareholder value is intimately linked to what is known about a company. Consumers and investors have long understood that what they buy and the investment decisions they make have the power to influence grand social, economic and environmental challenges. As far back as the 1700s, John Wesley advised his congregants against what he called any sinful trade. When the Methodist Church began investing in the stock market at the turn of the 20th century, they avoided companies involved in alcohol and gambling. Incidentally, I was raised in a household where my grandfather was a Methodist minister, and when I had my birthday party in a Methodist church, they agreed to hire us the hall on the condition that there was no dancing. This is the 1990s. When investors saw the destruction of the Vietnam War in the 1970s, they created the first ethical fund, the Pax World Fund, so those investors could avoid investing in weapons and weapons manufacturing. And meanwhile, debate has raged about what this means for corporations and how corporations balance their responsibilities to shareholders and to the public. We must create a financial system in which environmental, social and governance factors into shareholder value, as much as sales or corporate acquisitions. Without transparency and robust public reporting, we won't know about the environmental, social and governance factors faced by a company. We won't be able to make decisions about where to invest our tax dollars accordingly. The more that companies make regulatory or reputational risks they face transparent through data and metrics, the more that investors are empowered to vote with their feet on their values and make long-term, values-aligned, sustainable investment decisions. With good ESG data, metrics and standard, people can move their capital with precision and thereby shape the world. This is how values drive value, as Mark Carney once put it. Strong, robust and transparent reporting, particularly on climate and tax, can drive a triple dividend for the climate, increasing investment, boosting regional engagement and working towards net zero. In Australia, total assets overseen by ethical investment funds on behalf of Australian investors are now worth at least $1.28 trillion, accounting for 40 cents of every professionally managed dollar. While investments in renewable energy in Australia are going from strength to strength, there's still significant progress to make on our renewable energy targets. In 2023, investments in utility-scale batteries soared to $4.9 billion, up from $1.9 billion in 2022. And meanwhile, financial commitments to utility-scale generation slowed significantly in the same period. The government's announced a significant expansion of the Capacity Investment Scheme to underwrite investment in renewables and dispatchable capacity. If we can drive transparency and get the settings right, then we can improve investment in the technologies required for the climate transition at the scale required. And let's be very clear about the scale. In the period since we've come to office, from 2030, we're looking at increasing the share of renewables in the grid from about 1/3 to about 4/5, a massive industrial transformation. Our government wants to motivate investors to commit to opportunities that help us transition to a clean and fair future, at home and in the region. We want to ensure investors can be confident about the environmental, social and governance characteristics of their investments. To do this, we're committed to strong and clear reporting frameworks in climate and tax. On climate, our government's proposed steps to introduce mandatory climate-related financial disclosures, to develop an Australian sustainable finance taxonomy, which provides a common set of definitions for sustainable economic activities, and to introduce a sovereign green bond program. As Jim Chalmers has previously stated, the Australian government's goal is to ensure that our business and financial institutions are disclosing material climate risks and opportunities in a clear and consistent way that's aligned with global standards and meets investor expectations. On tax, our government's committed to boosting multinational tax integrity, to avoid tax avoidance and improve transparency through better public reporting. This includes measures to improve transparency through public reporting of certain information on a country-by-country basis, through requiring Australian public companies to disclose information on their subsidiaries, and through requiring tenderers to large Australian government contracts to disclose their country of tax domicile. Our goal is to ensure that multinationals pay their fair share of tax and contribute broadly to society. The second dividend is greater regional engagement. Transparent frameworks can bring together countries in the region to tackle shared challenges and meet common goals, working towards our commitment to reach net zero by 2050. Last year, the Australian government invested Australia's Southeast Asia Economic Strategy to 2040, which includes a recommendation focused on expanded work with Southeast Asian partners on high quality and interoperable sustainable finance classifications and climate-related disclosure risks. Ensuring interoperability with Australia's emerging standards ensures investors and businesses don't face new barriers in the region. The Melbourne Declaration, flowing from the most recent ASEAN-Australia Special Summit, was clear in recognising the significance of the net zero transition and committed to deepening business engagement in the green economy. And I hope someone will tell me if that bell... No, that's the House of Lords. We're all good. The third dividend is in making sure that investments flow through to change. This is to ensure that investments are made in corporations which are actively limiting global temperature rises and recognising the adverse impact of rolling climate disasters on businesses. It's vital that Australia acts to create sustainable finance systems, not just because we will feel the impact at home, but because our region is at the forefront of these changes too. We share those impacts together. By improving transparency through better public reporting on climate-related disclosures and sustainable finance classifications, investors better understand negative externalities and how seriously climate change will impact companies. In turn, they can make robust and well-informed investment choices at home and in the region. At scale, this amounts to significant progress towards net zero, as capital follows values-informed choices. And by ensuring that companies improve the transparency of their tax information, investors can assess how companies are directing their efforts, whether they're focused on minimising or avoiding tax or focused on their purpose and innovation. If it's the latter, it's much clearer how they're contributing to society by growing quality jobs, boosting productivity and paying their fair share towards essential public services and programs which work towards a greener, fairer future. So when faced with grand social, economic and environmental challenges in the past, investors have voted with their feet. And past crises have also given rise to how we measure the impact of companies and the risks they face. The 1929 Wall Street crash was followed by the creation of standardised accounting practices by regulators. After the global financial crisis, measures were put in place to improve bank risk reporting and exposure. Today, we stand at the crossroads of opportunity and crisis. We face rising temperatures and a race against the clock to achieve net zero. And yet we also have one of the greatest investment opportunities in a generation, a profound chance for socio-economic and environmental transformation. It's vital that we can continue to make climate and tax risks transparent so we can harness those opportunities. Measuring, standardising and harmonising data to understand risks and inform decisions will lead to a cleaner and fairer future for Australia and our region. Thanks very much.
Thanks for watching. We love that we can make these videos free to watch, but they're not free to make. It's thanks to our generous supporters that we can keep making research and content that changes minds. So, if you like what we do, please consider giving to the Australia Institute so we can keep doing it. Visit our website australiainstitute.org.au and click the donate button to see how your support can help fund high quality research that matters.